we've just had the PCE inflation data come in broadly in line with estimates, but there is one particular figure which the markets will be focusing on because there was a miss on the month-over-month reading. Yes, inflation came in slightly hotter. I'm going to explain the implications for this. We've currently got Bitcoin falling here, down 0.5%, pulling back slightly. The altcoins are pulling back a lot more. You've got Ethereum down 2%. You've got various other altcoins such as Solana down 3%. Phantom pulling back 5% after its crazy move over the last couple of days. Even Aptos down 2.7% today. What is going on? We're going to get into that. Smash up likes. Don't forget to subscribe. Check out the links in the description. And it was the PCE inflation. This is the Fed, the FOMC, Jerome Powell's preferred measure of inflation. The expectations for the core PCE, which is the one you're looking at right now, was for it to come in at 4.4. It came in on the dot at 4.4 for a green beat. If we then look at the overall headline figure, that was expected to come in at 5.1. That came in at 5. So again, another beat. The month-over-month reading was expected to come in at 0.2% inflation month on month. It came in at 0.3. Now you're probably wondering, like a lot of the markets, that this isn't too big a deal. But you need to remember, this is the figure that the Fed looks at. They focus more on the month-on-month figure than the year-on-year figure. This is the run rate. This is how the economy is running right now. Now, if you take the target, which was supposed to come in at 0.2, annualized, if you multiply that by 12, that's a 2.4% annualized run rate, which you're currently running at based on your performance over the last month. By it coming in at 0.3, to you and I, it may just look like it's 0.1. Who cares? But that means you're running at an annualized rate of 3.6, which is very different to the 2.4, okay? So this is a miss. We can't just brush it under the carpet. And this further signifies and gives us evidence, and the market seems to understand that Jerome Powell needs to crack on with further rate hikes. Now, I've been on the position that we're going to see 25 base points. The market finally, over the last kind of 24 hours, have flip-flopped into that favor as well. Because initially, you had 40% of the market pricing in a pause. And I was sitting here like, guys, this needs to change, because if we went to the FOMC meeting, which is in about 4 days' time next week, and the market was expecting a pause and Jerome Powell does 25 base points, the market would have been upset. Now I'm a little bit more comfortable. The market is pricing in 25 base points. Now there's still chance that Jerome Powell can shock the markets and do 50 base points, but I personally think he's going to do 25, be really hawkish in his commentary, and then probably do another 25 at the next meeting just to make sure, and then perhaps consider a pause at the one following. So remember, we've got February the 1st, then the next meeting is March the 22nd, and then May the 3rd. So we could be seeing a pause either at March or May, which is good news to see at this half of 2023. Now, how are markets responding? Guys, quick story. So the other day, I got a message from one of my team members, and it turned out he got caught up in a phishing attack. Yes, these phishing attacks are getting more and more sophisticated, whereby the attackers are able to pretend they are a senior person in a company and request payment from somebody else. On top of that, I got another email from one of our IT guys who said I need to change all my passwords because they've been leaked on the dark web. This is a complete pain, and that is why today I'm proud to partner with Aura. Aura is an easy to use app which gives you everything you need to stay safe online. Aura protects you from scammers and hackers by scanning the dark web, where criminals sell stolen information, looking for your emails, your passwords, and your social security numbers. It then alerts you fast if it finds anything. Aura also gives you near real-time alerts on suspicious credit inquiries, like if someone was opening a loan or a credit agreement in your name. Their built-in VPN also allows you to stay anonymous online by keeping your browsing history and personal information safe and encrypted. Aura even helps you manage what your kids can do on their devices as well, so you can restrict specific apps, set screen time limits, and you can even set focus times to ensure your children are doing their homework instead of binging on my videos on YouTube. And not to forget, their password manager also lets you store and access all your passwords in one place. Now here's the thing, maybe you've got an app or two that does some of these things. The beauty with Aura, and what I specifically like about it, is that they've managed to bundle all of these into one place. So you just need Aura and it'll take care of all your online phishing, scamming, and VPN needs. So let Aura do the hard work of keeping you safe online, and we've got a 14-day free trial for you and up to 60% off on the subscriptions. Definitely head over to my link, ijaz.uk /aura to take advantage of that. And let's get straight back into the video. Well, you've got fear and greed sitting at 55, right? The market is now officially in greed territory. And you guys will notice this. You will feel it differ. Those people who are not talking about crypto when crypto is down at 15,500, those who are telling you it's a scam to your face, they'll now be asking you, is it a good time to enter? What do you think about the market? Should I be allocating crypto? That greed is slightly coming back. We're nowhere near 100 yet, but you're probably getting a little bit of a taste of what that bull market FOMO looks like. And that's what you've got to protect yourself from. Now looking at the day chart, you can still see Bitcoin is consolidating, right? It's important to zoom out and look at this fact that we are still consolidating in a little bit of a pattern. Exactly what that pattern is, it really doesn't matter. All we know is last time we had our big move and we finished that move on the 14th of January, we consolidated for 1, 2, 3, 4, 5 days and then another big move. We've now consolidated for 1, 2, 3, 4, 5, 6, 7th day, but could we still get that big move which takes us to 24,000 and 25,000 on the next pump up? So far, the bears have not stepped up, and that's what's going to be really positive for the bulls. If I bring out the EMA ribbon, where have the bears been? Look at this EMA ribbon and tell me, what are the bears doing? After we had our initial move, if you were a bear, you would have at least expected it to come down and retouch that at 18,700 on the EMA ribbon. That's a basic push to show that the bears are alive. They weren't. They were completely capitulated, and then all the bears were able to do is pull off a stalemate around this 21,000 level, which we did for 5 days, and then we said enough of you bears, and we pushed through the next level straight through 22,000. And now look, the same again. The bears have not been able to step up and push us down, nor they've not been able to push us down to 22, they've not been able to push us down to the EMA at 21, or even 20. Now, if you're a bull, any of these retracement levels are perfectly fine. If this happened, I don't have an issue. If this happens, I don't have an issue, right? If it wants to come down even down here, I don't mind if that happens as well. It's not an issue. These are all normal retracement levels and we'd still hold the daily EMA ribbon. So what we're seeing right now is the bulls are doing what the bulls feel like right now, and the bears don't seem to have any presence in this market. Now, that doesn't mean we have to disrespect them. And the reason we will not disrespect them is because they do still own the larger time frame. I'm going to keep on harping on about this because everybody focuses on the hourly chart, the 4-hourly chart, even the daily chart, which I just showed you. But zoom out and understand that the majority of the trend, this major trend now, is being owned by the bears, and it has been for a while. Until we've earned our stripes, until we've graduated and got above this weekly EMA ribbon at 26,000, let's not get too overconfident. We're still in a rally going against the tide. Please, I can't emphasize this enough. We're in a rally going against the tide. This is the tide, the EMA ribbon, fully extended. Look at this, not just a joke EMA ribbon. This is one which has been cultivating ever since we started flipping it over in April 2022. We've been hugely extended to the downside, right? So we are being owned by the bears on this time frame, but we are starting to make progress, right? We have run into the EMA ribbon, which is better than what we could have said here, or here, or here. Now we've finally done it. But you can see where the sell pressure is starting to come in, and that is why we've got a wicking candle here. Again, if none of this makes sense, ijaz.uk/TA. We go through all the different types of Japanese candlesticks, dojis, dragonflies, shooting stars, bullish engulfing, bearish engulfing. What do these all mean? All gone through for free, ijaz.uk/TA. Don't delay that, guys. It will not be free forever because I know people procrastinate, so I'm not just going to leave that course up there forever when other people are charging you thousands of dollars, but that's making you take action, right? That's something to be said about you. If you're delaying it and procrastinating when someone's literally put 10 years worth of graft for free to teach you TA, you got to ask yourself, what else do you want? It's on a plate. Really important. We're seeing that on this time frame. Please do not neglect this. And again, let me show you the VPVR for those still confused. There's still volume. Yes, we've managed to get through the point of control. Yes, we've managed to even get through this 22,000 level, which is tough. But it still goes all the way up there to 24,400, where there's some serious volume for us to work through here on Bitcoin. Similarly, let's bring out the Bollinger Band, right? Because everybody wants to give you bullish scenarios. Let me just show you the other side of the stick, because this is what I'm here to do. When markets get frothy, you find that everybody becomes this crazy bull. And when markets are really scary, everybody becomes a bear. Like, who's giving you the rational picture of saying, guys, let's enjoy this rally. It's a nice rally here on the daily time frame, but on the weekly time frame, this is where we're at, so you know. You're swimming against the tide, that's fine. Some of you are strong swimmers, you'll do just fine, but be very, very careful, right, if that starts to get overwhelming. So you can see here we're running into the top of our Bollinger Band. Now, yes, this time could be different. Yes, we could break the Bollinger Band. Yes, we could close above our weekly EMA candle. But also respect the fact that they could show volume here. The bears could try to push us down at least to the middle line, around the 18,700 line, which also happens to be where the bottom of our channel is, right? That green line. 18,700. It's not a coincidence that these are key levels here on the Bitcoin chart. Let's also take a look at Bitcoin dominance, because Bitcoin dominance is playing out exactly what we were saying here. You can see on the weekly chart here, you've got this double bottom formation, broke out to the upside. And again, you can see our broad channels here on the weekly chart, and you can see Bitcoin is trying to work its way up towards the top of the channel, closer to that 48% range here at the top. So you're seeing Bitcoin fall, you're seeing altcoins pull back today, but the Bitcoin dominance is going up because Bitcoin is falling at a slower rate than the altcoins are. Check this out, because this is something not a lot of people are talking about. Morgan Stanley just released a piece of data around savings. Now, one of the things people were not understanding is, why is the economy still so healthy? You need to understand that after the excessive, record, unprecedented amount of printing that central banks were doing, people had more money in their bank accounts than they've ever seen in their lives. And that is why, even when the money stopped, even when interest rates were starting to go up and Jerome Powell was doing his 75 base point rate hikes, people were still spending. They were still consuming. One, they were locked down during the pandemic. Two, they've got record amounts of savings, cash in the bank, which they don't know what to do with, right? From all these stimmy checks and all the other loose policy that governments around the world were doing, and they were spending. But now you're seeing that start to change. Those savings are slowly starting to dissipate and return back to the norm. So you can see this curve here, and it's starting to bring those excess savings back down to sensible levels. When that happens, that could provide a little bit of resistance to speculative cryptos, right? In terms of the underlying theory and macro theory around Bitcoin, I think that's going to progress. I think risk will slowly rotate back on as Jerome Powell completes his battle against inflation and starts pausing and eventually loosening monetary policy. But if savings are starting to reduce, and we do start to see a slowing in the economy, and we do start to see less money, which people can then speculate in crypto, that could have an effect on us as well. So all that to say, let's not get too carried away. Yes, we can enjoy it. Yes, we can understand that this is a nice little bull rally, but we've got to earn our stripes. Let's work our way through the CMA ribbon on the weekly chart, and then things will change. Then we can be like, okay, this bear market is truly done. Now we can work sideways and try to work towards our next bull market. Let's get a quick visual here on some of the altcoins. You've got Optimism pulling back 6%, Near Protocol down 8%. You've got the likes of Theta up 3.5%. Interesting pullback day generally across the board here today. All the ones which are moving are all slightly pulling back today. Phantom down 3 or so percent, Aptos down about 5%, and a general pullback day here on Friday post the CPI. Let's see how the rest of the day progresses, because the markets will have to absorb this CPI data, and broadly it's in line. Yes, the month-on-month was a little bit hot, but broadly it was in line. So we are seeing progress. Things are starting to look better, but I think the market is going to come to a realization that Jerome Powell still probably has a 25 base points and maybe another 25 base points up his sleeve for the next 2 meetings. So there you have it, guys. Macroeconomics showing us that inflation is starting to ease. We've now got core PCE below the Fed funds rate, and this is normally one of the indicators many economists will use to suggest that we should be pausing now. So there'll be a lot of voices. Guys, quick story. So the other day, I got a message from one of my team members, and it turned out he got caught up in a phishing attack. Yes, these phishing attacks are getting more and more sophisticated, whereby the attackers are able to pretend they are a senior person in a company and request payment from somebody else. On top of that, I got another email from one of our IT guys who said I need to change all my passwords because they've been leaked on the dark web. This is a complete pain, and that is why today I'm proud to partner with Aura. Aura is an easy to use app which gives you everything you need to stay safe online. Aura protects you from scammers and hackers by scanning the dark web, where criminals sell stolen information, looking for your emails, your passwords, and your social security numbers. It then alerts you fast if it finds anything. Aura also gives you near real-time alerts on suspicious credit inquiries, like if someone was opening a loan or a credit agreement in your name. Their built-in VPN also allows you to stay anonymous online by keeping your browsing history and personal information safe and encrypted. Aura even helps you manage what your kids can do on their devices as well, so you can restrict specific apps, set screen time limits, and you can even set focus times to ensure your children are doing their homework instead of binging on my videos on YouTube. And not to forget, their password manager also lets you store and access all your passwords in one place. Now here's the thing, maybe you've got an app or two that does some of these things. The beauty with Aura, and what I specifically like about it, is that they've managed to bundle all of these into one place. So you just need Aura and it'll take care of all your online phishing, scamming, and VPN needs. So let Aura do the hard work of keeping you safe online, and we've got a 14-day free trial for you and up to 60% off on the subscriptions. Definitely head over to my link, ijaz.uk/Aura to take advantage of that. And let's get straight back into the video. Shouting for Jerome Powell to think about, or at least tell us, when he's going to pause. Now, I don't think we're far away. If you look at the process of what we've just been throughout 2022, fighting inflation, interest rates going up, not knowing when Jerome Powell's going to stop, we're closer to that final innings. Yes, will he pause the next meeting? Likely not. Will he pause the next one after that? Maybe. But will he pause in the next 3 or so meetings? I think we can comfortably say we're closer to the pause than we are otherwise, and that should give markets reason to start rotating on. Hope you guys enjoyed this video. If you appreciate this type of content, smash the likes. Don't forget to subscribe. As always, check out the links in the description. Don't forget to go watch this video here, and I'll see you in the next one.